U.S. markets right now, and for that, we've got Bob Iaccino joining us. He's the co-founder and chief market strategist at Path Trading Partners. Good to catch up with you, Bob. Give us your sense in terms of what's going on in the market today. It seems though volumes are pretty light.
Yeah, it was awfully quiet. This is one of those days where I don't even look at the change on the day. It's just an unchanged day as far as I'm concerned. You look over at sector performance, consumer staples was about all there was to talk about. And as you mentioned, with the volumes is light, I don't mind light volume days if the move is decent as long as it's not holiday related. We do have a shortened week this week. But overall, it's really kind of a non-event from the perspective of the indexes.
So what do you think markets and investors are thinking about right now?
Well, I think specifically today was a tug of war between two smaller factors. There were some reports that the U.S. had kind of softened their stance on demands on China. So another tiny little ant-sized baby step toward a trade deal with them. The EU supposedly released some officials to begin negotiating with the U.S. on their deal, which I've maintained for a long time the U.S. won't even entertain until they're near a deal with China or done with China. So in other words, no deal. And then lastly, the sort of pull down on the markets was the mixed earnings from Goldman Sachs and Citi after getting pretty decent earnings on Friday from the banks.
Yeah, talk to us a little bit about what you think of the Citi and the Goldman earnings. I just had a guest on who thinks that the results were pretty good, but they're a little bit lackluster, no?
No, I think Brian was right in terms of what's going on, especially with Goldman Sachs and some of the issues they've had on the revenue side. That was a pretty big EPS beat. The revenue miss was expected, but they did even worse than was expected. 13% lower on that top line number is not good. But I didn't hate Citi's returns at all. I certainly didn't hate Wells Fargo's or JP Morgan's. And I think we're going to beat overall with the financial sector. I should say really the money center banks are going to beat overall. We're actually looking at some of the banks to put positions on. So I didn't hate it as much as the market did. But again, an unchanged day, a low volume day. I'm not even sure the market hated it that much.
Good point. Bob, let's talk about a few other stocks in the news. Disney, that stock continues to do well, of course, following their most recent news on their services. What are you seeing here in terms of the activity?
You know, Catherine, this is one of those times where I hate my own process because I love Disney. I really need a pullback, and I'm not sure I'm going to get it, but I really want to be involved in Disney. I think them coming out with the streaming service at that price was a direct shot at Netflix. I'm not breaking any headlines by saying that. But one of the things that I keep looking at is the two sort of separate content producing factories at Disney that are now under one roof. And by that I mean the film studio and now the streaming service. Is the streaming service going to be able to pump out content, lower quality content, and yet with the best legacy catalog there is? I think a lot of people discount what's actually watched on Netflix. You can see the numbers. There's some decent legacy content that's going to shift over to Disney from the Marvel properties. I just watched Frozen for the first time. I don't have kids, so I don't watch those movies, but I watched Frozen over the weekend. I friggin' loved it, and I'm going to need Disney to watch it again. And there's a whole catalog of those things that people like to watch over and over again. Those movies, Disney by far has the best one, and with the lower price. I agree with Brian that you're not going to have only Disney. But if you were going to have only one 5 years from now, it probably would be Disney. So that means there's going to be less subscription losses once they actually get rolling if something breaks bad.
And Bob, what are you seeing in terms of activity in the Disney shares today? Are you seeing anything interesting, whether it's options or just pure buying? What is going on with the stock?
Today we saw a lot of put selling, to be honest, as opposed to stock buying, which is interesting because the people buying the puts are buying the stock. So as a hedge against that. So you're not seeing a lot of outright position taking other than the long side. And that has quite a bit to do with that big gap. If you're a technician at all, you'd love to get involved once that gap gets filled. And really, I think the only opportunity for that gap to be filled is earnings, which you're waiting until May. So we're looking at it in terms of taking like smaller positions at these levels. And then if we get some sort of event around earnings that takes it back down to around 126 or so, 125, then we can actually just outright buy the stock.
And then let's talk a little bit about Facebook as well. You know, it seems as though the hedge fund players have been short or have been definitely selling the stock on the wrong side of the trade for sure. What's the take on Facebook these days?
Well, it's great. I was really happy to be able to hear Brian talk before me because he's talking about taking some off of the table because of the move. And I think it illustrates the difference in time of position or in duration of position, because I need something to break out to get involved. And we actually want to get involved in Facebook in the very near future from the long side. I think Facebook could get as high as 209 in the short to medium term. And I think it has a lot to do with Mark Zuckerberg kind of taking the lead now, saying we should be regulated and this is how you should regulate us. So in other words, giving them a roadmap, and politicians are cowards, so they'll take the roadmap, and then he's got it kind of designed in theory. I mean, this is kind of a pre-conspiracy theory here, but he's kind of got it in the way he wants it. Facebook rallies, they own Instagram, money machine there, that purchasing directly on Instagram is just going to get bigger and bigger, and then owning WhatsApp. I think it's been beaten up, and I think this move we've seen is not enough of a move yet.
And just lastly here, Morgan Stanley. What's the sentiment towards Morgan Stanley these days?
Morgan Stanley has kind of a neutral sentiment. A lot of it has to do with that Lyft potential lawsuit, with the theoretical short product that they sort of sponsored. But I think Morgan Stanley's going to get past that. I don't think they're dumb enough to create a short product that would at least be outwardly noticeable like that. I see them taking a bigger and bigger share of the IPO market. And we've had a very active first few months in the IPO market. And I think Morgan Stanley's going to be taking larger and larger shares of that. We've already seen JP Morgan digging a little bit into Goldman Sachs' dominance. Morgan Stanley's going to be involved in the Uber IPO as a lead underwriter. I think they're going to get a bigger and bigger slice of that market. We see any curve steepening at all. I think Morgan Stanley is the big winner of the money center banks.
Okay, we'll leave it there, Bob. Good to catch up with you. Thank you.